Hello, everyone, and thank you for tuning in. Today, we're going to be talking about how to navigate the market. This is going to be geared towards newer investors, um, and just to show how I essentially meander through this market, and specifically how to prepare for the next bull run. Right? We're going to talk about uh, coin allocation, and using metrics or charts to show which ones to pick. This is kind of relate. It's going to kind of relate to my video on picking winners. Same kind of mentality. We're going to be stacking a lot of coins together, and looking at their percentage gain for a certain period of time. So with that said, I have Bitcoin here as the first chart, just Bitcoin, which is the cornerstone, I believe, to any portfolio. Bitcoin is the market mover. Bitcoin is king. Bitcoin is the largest market cap cryptocurrency on the market. And as you can see, with its recent moves, especially its break of the 20-week moving average a few months ago, you can definitely tell and see visually that Bitcoin really moves the market. If Bitcoin becomes extremely bearish, the altcoin market goes bearish, the rest of the market goes bearish, we go down. And on the flip side, the past 2 weeks have been pretty bullish. People are really liking what they see. And you see like you see the altcoin US dollar valuation go up. You see bullish sentiment in the market. Bitcoin is the real driver of that, whether it's going up or going down. Because of that, this is why Bitcoin is a cornerstone piece of your portfolio. And then I would put it even further to say that it should be the majority stake of your portfolio. For me, it is 50% of my portfolio. So it is larger than any cryptocurrency altcoin that I own individually, and it accounts for half. So like half of my other allocations are in the various altcoins that I've bought. At the same time, when making trades, so this is when we're looking at when to buy, when to sell. Um, I would strongly recommend refraining from looking at maybe the hourly. The hourly is cool, the hourly is exciting, and I might do some videos on the hourly chart, but it's no place to start basing your trades off of. It really isn't. I don't think so. Especially if you're like me who use longer term trades, swing trades. You hear that a lot. The hourly is no place to start basing off macro trends off of Bitcoin. And because of that, I wouldn't necessarily base my trades off of it. Another thing to note is that um, the hourly is going to be so difficult to kind of time, right? The market can move on a dime. It can move very quickly, and that the idea that you can pinpoint those moves on a shorter term time frame, because the narrative is that the move from the shorter term time frame um, gets amplified through the longer term time frame, right? And so with that, people tend to go look at the hourly, the 30-minute, the 15-minute, I don't know. And so with that, you are basing your trades off of shorter term moves, which I don't think is very safe, especially if you're using like leverage, because you're looking at shorter term moves, smaller moves. You can see, especially for moves like what we saw the past 9 days or in May when we broke down, moves can happen very quick. You will get liquidated if you're basing your trades just off of shorter term time frames. So one philosophy that I have is to acknowledge that I can't predict price moves um, off of the hourly nor on the daily. Um, and I have better chances of making correct moves off of longer term time frames, longer term trends, because they last longer, right? And so that because of that, I rely essentially on the weekly patterns of Bitcoin. Now, it's not the most exciting, and even the monthly I also use. It's not the most exciting. You gotta wait a month until a new candle starts to get printed. So you're literally looking at the same candle for 30 days. And so this does two things. One, it helps you identify macro trends, right? So for Bitcoin, as an example, you can see that Bitcoin on the monthly has these boom and bust cycles, right? Bust, boom, bust, boom, right? It's very simple. You cannot identify this on the hourly. You really can't. And these moves last for months, okay? For months. If we take measured moves, this was a 700 in 1 day move, 914-day move. If we take the bottom here and go to the top or where we are now, that's, we're talking about an 881-day move. So uh, with this, you can really identify um, moves up, moves down, where to accumulate, and where to sell, right? This is essentially it. This is kind of my philosophy here. Another thing is that you don't have to look at the charts every day or every hour. And now I know you will, because I still do, but that the idea is that, look, because the monthly is going to get printed in a month, right? There's no point in looking at the same candle every month. You tend to look at the charts less, because you're looking at these monthly trends. It takes months, right? It's simple as that. And so because of that, there's less stress in looking at the hourly, because I feel like it's very stressful looking at the hourly or the 30-minute, etc. And so this is why I gravitate towards months rather than hours. And you can really identify swing trades here. You can also identify bottoms, right? And this is where, say, the 20-month comes into play, where you can identify that any time that Bitcoin is below the 20-month, it's a pretty good time to buy, right? It's a pretty good time to buy Bitcoin. However, all of this doesn't really matter to you, especially if you're new. Because if you're new, odds are you didn't buy here, you didn't buy here, you didn't buy here. And so what value is that to you? And I recognize that. And so right now we're not going to be taking a look at the monthly, but I would ensure that going forward, if you stick around, if you're going to be here for multiple years, 10 years, for example, I strongly recommend you gravitating towards the monthly once the market cycle top is in, and you can then start to identify, say, bottoms within the market on the monthly time scale, and this is where you'd want to accumulate, right? This is where you want to accumulate. Obviously, for me personally, I wasn't here, but I was here and I was here, and this is where I accumulated most of my Bitcoin. So, moving on from that, you know, the monthly or these monthly bottoms have no relevance to you, because you will never be buying at those levels again. I mean, it's high, it's possible we come back down to those levels, we break down to the 20-month, in which case it's a very good buying opportunity. But in today's perspective, like, these mean nothing to you, right? You're never buying at that level, and odds are you're not going to wait to buy at that level. And you shouldn't. You shouldn't. So, what kind of price action can you that we can talk about that has some relevance for new buyers, right? Well, that could be the 20-week moving average. Okay, the 20-week moving average is a moving average that is quite helpful within Bitcoin, right? In the last cycle, we see that every time that Bitcoin bounced off the 20-week moving average, it moved up. It moved up. And every time that the Bitcoin broke the 20-week moving average, we see the price go down. And so if you are looking for a time when Bitcoin is at an optimal, not the greatest, but an optimal price range to accumulate, to start accumulating, the 20-week moving average is probably a place for you. Now, right now, Bitcoin is below the 20-week moving average. It just moved up 30%. Okay, 30%. So obviously there were better times within the month to buy Bitcoin. But, I'm going to assume this video is saying you just saw Bitcoin today. Let's say you just saw Bitcoin today. You didn't see it a few weeks ago. And so you did not see the prices at, sub 30. And so with that said, right now, 39,000 is the price that you would have to pay to accumulate Bitcoin. For someone who has no positions in cryptocurrencies, has no exposure, buying under the 20-week moving average is probably the best kind of opportunity you'll get. Okay. Now, I will say with an asterisk, there is a chance that Bitcoin can continue to go down, right? If you've been watching some of my videos, we talk about the potential of the reach of the 20 week and a rejection. We also talked about an opportunity where Bitcoin can just break above the 20-week moving average. And so, with that kind of uncertainty, how can you navigate the market in such a way to mitigate risk and to try to get the best kind of bang for your buck, the best kind of performance for your capital? And so, that's probably where dollar cost averaging comes in. Now, dollar cost averaging is putting a sum of money within Bitcoin for a duration of time. So that would be maybe $10 a week, $10 a day, $100 a month, whatever you want to call it. Set yourself aside a date interval for yourself and a sum of money. So if you had $1,000 and you wanted to invest it in Bitcoin, spread it out over a number of weeks, months, days, whatever's comfortable for you, and put some rules for yourself. And so if we apply what we're talking about in this video, then say whenever Bitcoin is below the 20-week moving average, I will put in $10 a week. As simple as that. That is one strategy that you can gravitate towards. It's simple, it's easy. You're not indicative to the price. The only thing that you're concerned about is the 20-week moving average. If it breaks above the 20-week moving average, you stop buying and then you start selling. And so that's or if you're looking to hold it long term, then don't sell. So that is essentially kind of the option you kind of have, maybe one of the best options to have if you're just entering into crypto market now. Having said that, I understand a lot of newcomers are more interested in altcoins. They look at the altcoins and they see bigger gains, which is true, but you get added risk. And so before we go into altcoins, I would I would strongly recommend to consider having a majority stake in Bitcoin. Bitcoin, again, as we said in the earlier part of this video, is the market mover. It is the market. Okay, whether you like it or not, it is the market, and therefore to mitigate your risk and to expose yourself to gains in the safest way possible, holding Bitcoin is one of the best options you can have in terms of managing your portfolio. Okay, moving on to altcoins. Now, some things to know. Yes, altcoins can have bigger gains than Bitcoin. It can have uh, it can have bigger drops than Bitcoin, right? So that's the double-edged sword that you're dealing with. You're okay? Great. If that's okay, then continue watching. If not, just accumulate Bitcoin. So, two things we want to ensure. We want to ensure that altcoins that you're holding outpace Bitcoin. Okay. If it doesn't, then you might as well just hold Bitcoin. How do we define that? Okay. This is where ratios come into play. Looking at the Ethereum Bitcoin ratio. And so you'll see that since the start of, say, the year, January 2020 to 2021, Ethereum has outpaced Bitcoin by a lot. Okay, by a lot. And these are the kinds of moves that you're looking for. You are looking for, say, okay, first week of January to where we are now, Ethereum has outpaced Bitcoin by 242%. And so we're looking at the Bitcoin valuation of Ethereum. We're looking at the duration of time that it's a duration set time that we set for ourselves, and we see that Ethereum has shown to outpace Bitcoin, which is great. You look at Chainlink. This is this is a pretty good example of if we look at the beginning of the year, right, and we look at where we are now, 107% since the beginning of 2020. Okay, it's outpaced Bitcoin by that much, so on and so forth. And so with that, you get a kind of idea of, you want to make sure that your altcoins are outpacing Bitcoin. If they are not, then you might as well hold Bitcoin. Okay, and so this is where this chart comes into play. Now, this chart here are just lines, that's price lines, right? We're not looking at candles here, so we're looking at daily closes on a line chart. And they're all measured on a percentage scale. I have it up to the beginning of January 2020. Okay, so much like how we were measuring Chainlink in Ethereum, and I have stacked on here the total. Oh, I moved it. We're looking at the total two. Okay, so total two is the crypto market cap of altcoins. So it's all the altcoins market cap into one measured. I have Ethereum, I have VeChain, I have Bitcoin, I have DOT, and I have XRP. Okay, just as an example, I don't hold uh, DOT, but I thought I'd just add it on here for whatever, just for the heck of it, just to show. So you can see that on the right, you see a percentage scale. So we're not talking about dollar increases. We're just talking about the percentage increase from beginning from the date we set for ourselves. In this case, it's 2020 to now. And so you see that over that period, Ethereum has increased a valuation of 16 or almost 1700%. VeChain has increased 1427%. Total 2 has increased an amount of 1300%. Bitcoin has increased 443%, DOT 371, XRP 275. So, based off of what we said on our first rule, we want altcoins that outpace Bitcoin, right? You will consider Ethereum, you will consider VeChain. You would also consider Total 2. Now, here's the second thing. We want altcoins to outpace the index. What is the index? The index is Total 2. That's essentially it. You want something that is outpacing Total 2. And so with that, you look at Total 2. You need an altcoin that has outpaced the market by over 1,300% since the beginning of 2020. And so with the altcoins that we have right now, Ethereum is the best option. VeChain is the best option, both of which I did have. I sold all my VeChain a long time ago. I am looking to buy in, but this is as an example of altcoins that I have had in my portfolio that are doing very well. Just as an example, we can add, a bunch of others. You can add Cardano. Let's add Cardano and see what's happened. So I just added it as a separate thing. I don't want that. Same percent scale. There we go. And so you see something incredibly different, right? You see something incredibly different. What do you see? You see Cardano since the beginning of 2020 has increased a valuation of 3,693%. It has outpaced Ethereum, VeChain, and Total 2. With that said, Cardano might be an altcoin that you consider buying. Now, you might be asking yourself, if you're maybe a more seasoned one, and say, well, I'm looking for an altcoin that has the ability to move 3,000%, right? You might be arguing Cardano's market cap is so high right now, it's hard to believe that in another, year and a half we're going to see a move like that. I want to be there before the move. And I agree with you. If we all knew that, then I wouldn't be making YouTube videos, and you wouldn't be on YouTube. You would just be busy, looking at your portfolio increase 3,000%. I think the idea is to embrace the fact that you won't be able to predict those 3,000% moves. What you can do is you can look at the charts. You can see what has been performing well, and you can see that's things that are not performing well. And those are the main key caveats. And then you can factor in certain things that might influence your decision. For example, DOT is a new coin. We haven't yet seen a ceiling for DOT. We haven't seen it play out a full market cycle. If you really like DOT, then this might be a play you can consider, even if it is below the threshold of Total 2 and for Bitcoin, right? It was only a few weeks, like a few months ago, where DOT really outpaced the market, and it was by like May 14th, it was up 1,400%, rather than where it is right now, 370%. Having said that, the one thing to consider is that during a bull market, everyone's going to make money, right? Everyone's going to make money. You can be throwing it into any coin you want, and odds are it's probably going to net you a profit. But so the important thing is to mitigate your risk, okay? Because that is what the crypto market can bite you in the butt for. It can become very volatile and you can lose a lot of money, right? The so that I, in my opinion, embrace the fact that you don't know how you can predict the market within the hourly. You can do a better job on the monthly. You're going to want to pick altcoins and cryptocurrencies that are able to outperform Total 2 and Bitcoin at the very least, as well as maybe even Ethereum if you want to add that in there, outperforming Ethereum. You then also want to pick plays that are on the safer option. Okay. And that's why you want to maybe consider using metrics like these by comparing the percentage gains of all of these cryptocurrencies to see which one has held its valuation the best. When looking at this chart, maybe you won't consider XRP. It's up 274%. If you just hold Bitcoin, you would have netted more money by this time. Um, and because of that, it's not an altcoin worth holding because the risk doesn't justify the gains, right? And you can see it on the chart. Anyway, that's all for today, you guys. Thank you so much for watching. Take care. Bye bye.